Hey, it's Jeff Green with Green Financial Group. Thanks for attending the video blog today. Today is part 3 of the 3-part series of my interview with Brian Wesbury. Stick around, it'll be good. We're in Austin today, right?
Yeah.
You know, the real estate market here is nuts.
Yeah.
This is crazy. We're based out of Houston. We tend to have a pretty good real estate market.
Right.
What is it about the different markets that make, is it just people from California and New York moving down here, driving up real estate prices? And would you see the same thing happening in Austin and Houston that's having a better real estate market as Chicago, LA, et cetera?
Yeah, actually, if you really look at the different cities, it's the Chicagos, the New Yorks, the San Franciscos that are getting hurt.
Yeah.
And the winners are Texas,
Right.
Tennessee, Florida,
Yeah.
Places with lower tax rates I hate to be blue-red, but it is kind of
Right.
that way. There's especially I left Chicago. The crime, the lockdown policies.
Yeah.
And the taxes, because now they have a downward spiral going on
Yeah.
there. So yeah, this Texas, Florida, Tennessee, the real estate markets are magnificent,
Yeah.
and I don't see that changing for a long time.
Right.
But even saying that, we're not going to see a collapse anywhere. I mean, I'm not saying downtown San Francisco is a really hard place to buy right now.
Yeah.
But it's not going to collapse because of the economy as a whole.
Okay.
And so that's not '08. It's not. I think the stock market is overvalued, but not very much.
Mm-hmm.
And if interest rates come down a bunch this year, if the Fed cuts, then it's really, this is not 1999, in other
Right.
words, or 2000, where we have a big crash in the stock. Nothing resembles it. So this is a minor recession that I see, and I think the Fed's going to react by cutting interest rates this year, which, by the way, goes back to your point, makes the
Right.
economy look good in an election
Exactly.
year.
Yeah. Your talk about M2 always fascinates me, right? And that goes back to the Fed and whatever. So just briefly for the folks out there, M2, Economics 101, M2 is demand deposits, right? It's the money in motion that we have out there.
Right.
M2, and when you talked about it, up until COVID, right? It had grown at a rate of about 6% a year
Yep.
steady. We need a steady growth of money, right,
Yep.
to grow the economy. Tell us about M2 and what's happened now since COVID.
Yeah.
And then the impact of that.
Yeah, so M2, all the deposits and all the banks, it was 6% a year. It would change. Some
Right.
years it was 2, some years it was 8, but it averaged 6 for the last 20 years.
Mm-hmm.
And then all of a sudden during COVID, it grew 42% during COVID. And when you print that much more money, so kind of if you have a bumper crop of soybeans, bumper crop, soybeans are everywhere. What happens to the price of soybeans? It comes down. If you have a bumper crop of dollars, that's when you print 42% more in a year and a half, and you usually print 9% more. That's a bumper crop of dollars. Then what that means is the value of the dollar falls relative to a barrel of oil, a gallon of gas, a rent, a square foot of a house, a new couch, a car. Like every pizza, everything went up in price, but it was really the dollar falling in value.
Okay, so that's where the inflation came
That's where it all came from. And so we had this, if you look at the chart of M2 going back all the way to 1960 is usually we bounce around a lot, and you can see the surge kind of that happened in the 70s. But the spike we just had during COVID, it's like nothing we've ever experienced in the history of the United States. So not only did money grow faster than it ever has, but in the past year, it's the first time it's fallen since the Great Depression. And this is it's a little bit of scary stuff. And if you believe that the money supply matters, and I don't know how it can't, then that's why I think we had the inflation. And that's another reason why I think we're going to have
Yeah,
a recession.
and I think your view on M2 is dead on. Why do more people not talk about M2? Why is the Fed not concerned about? Why does nobody ask the Fed about M2?
It's a mystery to me. I mean, I really do. I mean, I've been close to the Fed a few different times in my careers. I was on the advisory council of the Chicago Fed. I worked in Washington. I knew Greenspan. I held hearings with him. I mean, I've been around the Fed and monetary policy for my whole career. And the Federal Reserve has changed a lot. If you go back 30, 40 years, they believed in Milton Friedman. Now, one of the things that Milton Friedman is known for is being a pure capitalist. He believed in the profit motive. Right. And see, now we talk about how there's going to be shareholder, you have to have stakeholders, not shareholders. I mean, because Friedman he wrote a really famous article about how the number one job of corporations is profit. And if you go to Washington and today, that's considered evil.
Right.
Like, oh no, corporations' job is the community, and diversity, and ESG, and all of these things. So they hate Friedman. Like I'm not kidding.
Right.
And Friedman's real contribution, what he won the Nobel Prize for, was pointing out that it was the money supply going down that caused the Great Depression.
Yes.
And it caused the inflation of the 70s. So it's kind of an intellectual canceling that's happened to Friedman. And I think that's why nobody likes to talk about M2, especially if you're in government, because it brings back on, if you say Friedman was right. Then then that goes against a lot of the things that government wants to do.
Right.
Because he always wanted a smaller government. By the way, he used to say, don't ever take a job in Washington, D.C. It'll ruin you.
Yeah, and that's what you did.
Yeah, I did. It took me a long,
I don't think you got ruined,
took me a long time to recover.
You had to recover. But it too, it's gone negative, right? I don't know if it's back up. I don't know where it is today, but it did go negative.
It's on euro. It's up in like the last couple of months, but very small amount.
Right. And so, is that part of the engineering of a soft landing that they're doing? Did they bump it? Increase the money supply by 40%? Right, and then now take it negative, and then maybe kind of ease it back up. Is this the soft landing that they're trying to engineer? Are they trying to do it through money supply?
It's all part of it. It's all part of it. They held interest rates way too low. They should have never been zero. They were 0 9 years out of the last 15. They should have never been 0 1 year out of the last 15. I think all that is bad. Yes, they're trying to fix the inflation that they caused. If they keep the money supply down, and if we can really believe the money supply, inflation will come down. Yeah. So yes, it's all part of that. They want to engineer a soft landing. The Fed, as far as my reading of history is they've never been able to. They always go too far in both directions. So we'll see if they can.
All right. So in Texas, I got to end it on oil and gas.
Yep.
What's your views and outlook there?
Yeah, it's the same. To go back to, we have a permanent increase in the money supply, and that means oil prices are going to be whatever they were over the last 20 years before COVID. They're going to be 30% higher. So, maybe, $20 on the low end,
right.
$50, $60. I know every once in a while they spike higher, but 50, 60 on the high end, we'll just add 20, 30%. Now, we do keep getting better. We aren't drilling more wells. We're just using technology to get more oil out of the wells that are there. And it's mind-blowing because we have record production and no one expected it. And yet prices are high. And that kind of proves to me that this money supply thing really does mean something.
It does.
All right.
Yeah.
So I like owning energy companies. And the reason is that prices are they're above extraction costs and they're going to print money. I think it's going to last a long time. And that's why, even though I say the market's overvalued and I think a recession's coming, there are places to be that will have positive returns. And even even in that crazy market crash after the dot-com bubble, value stocks, which I would consider energy today, that's because they're just, they're just cheap, and low vol stocks, and dividend payers, which, I mean, gosh, if you look at the oil companies, they have paid tons of dividends. They're the winners in this kind of environment.
Brian, thank you very much for your time. Always good to see you. Follow this guy on Twitter. I follow one person on Twitter. It's him, at Wesbury.
All right.
Thanks again.
Thanks, Jeff. Thank you very much.